Hello everyone, happy Sunday. What's up? What's up? How we doing? Happy Sunday. All right, there we go. Audio's good. Hope you're all doing well. Ready to get back to business here. All right, guys. So first things first, before we get into the charts, as usual, going to start with a important lesson here, a takeaway from our education channel from this week, which you definitely should be in our education channel for weekly insights from myself and my team. Important things you have to keep in mind and be aware of on your journey to becoming a profitable investor, profitable trader. All right. So we'll get into that here in a moment. Before we get into that, first, I do want to let you know with regard to the Middle East and what we have going on there and how that will absolutely impact the markets here. So just keep in mind, guys, the analysis, what I'm sharing here, is what I'm looking at the present with the information that I have, right? When we open at 6 p.m. Eastern tonight, we will see the futures market open, and we're going to see how the market is going to digest what it is that happened this weekend and what's going to happen from what took place here this weekend. And what I'm referring to is, again, the Middle East. As much as I don't like to go into the political side of conversations and talk to you guys about, any of that stuff, because it's not really fruitful. We're here to make fucking money, not bullshit around and talk about politics. Politics is for broke people. So we're not here to talk about that, but you do have to understand how it is going to impact the markets. And what I'm referring to is there was 2 U.S. service members killed in, I believe it was one of the Middle Eastern countries. I don't remember which one to be exact. But based off that, the U.S. military and the U.S. administration has promised to strike back and strike back hard. So whether you agree with that or not, that's not really what I'm here to talk about. I don't really care if you care about my opinion. I think they're all corrupt. They're all evil. So there you got it. But in terms of how that's going to impact the market, that will likely have a lot of ramifications. And especially now that they're trying to kind of pin it on Russia, China, they're helping them out. So, what that means, okay, well, now the U.S. needs to really get involved because it's not just Iran anymore, it's these other countries. So, whatever. Saying all that to say, expect a lot of movement in the markets this week. Do be mindful of that. And that could cause a severe gap open on Sunday. So, saying all that to say, I'm going to give you my analysis and what my expectations are here going into the week. But again, that can change because of the overall geopolitical climate that we're in. All right. So we'll cover indices here in a minute. I'm sure you guys want to know what we're looking at here and why this is a key level of interest. We'll talk about all that great stuff here in a moment. We're going to start with US dollar bonds, NASDAQ, and then we'll take a look at some of the usual suspects. And then I told you guys they'd bleed SpaceX out like a pig. They did. And yeah, I think that'll be it. I think I'll take a few lovely questions and we'll keep it moving. My brother, they didn't take out that liquidity. Yeah. Well, or your broker didn't take out that liquidity. That is strange because we all have the same price on futures. Are you trading the CFDs? If you're trading the CFDs, that would explain. If you're trading the CFDs, that would explain the difference in the price. But if you're using the futures market, then that should be, for the most part, everyone has the same prices. If you're using the CME contract, we all deal with the same price. That's the benefit of futures, right? That's why Forex is not as professional as a market as the futures market, because the brokers are different prices. So I'm assuming that's probably what you're referring to. All right, guys, let's get into it. You wanted to share something about the education channel? I did. Thank you for the reminder, sir. All right, guys. So checking this out here. Very, very important thing to consider here, right? You're always going to hear people tell you about psychology and you have to not think about the money, you have to follow your process, all that great stuff. And that's all very important. But the biggest, most single transformation that you're going to see in your trading, in your journey to become a profitable trader, is when you can stop looking at every transaction and worrying about the P&L of said transaction. And you can simply focus on executing your system. You show up, follow the rules. The model says to take a trade, you do. The model says you don't take a trade, you don't take a trade. And when you can start measuring your performance, measuring your results as to how well you follow the plan, and get out of the emotional roller coaster of, oh my God, I made money, this is so great. Oh my God, I lost money, this is terrible, I'm depressed, put me on suicide watch, right? You have to be able to get out of that, because if you're on cloud nine, you're happy, market's giving you wins, that's great, but what can bring you up can bring you down, right? So if you're all hopped up when you're winning, well, then you're gonna be all depressed when you're losing. So what you have to do, what I teach those that work with me to do, the best students that I work with that do this really fucking well, they are able to detach from the money. And it's not easy. Obviously, it's much easier said than done. But you have to learn how to detach yourself from the individual transactions and not get all excited, because the whole point of this business, when you're trading, it's ebb and flow. It's right. Money comes in the account, out of the account, in and out. And you have to be able to handle that. And the way to handle that is having the right mindset around it. And the key is, the biggest key is, if you still get really excited on the wins, you're setting yourself up to get crushed in the drawdown. And then that's where you feel like shit because you're in drawdown, right? And then you magnify it, which then causes you to make poor decisions, which then leads to 1 loss to 2 to 3 to 4 to 5, and then to a blood account. Very easily fixed, but you do have to have the right mindset. And the biggest transformation, and once you guys get to the other side and you are profitable, you're going to come back to me and say, hey, Dylan, you were right. When I finally stopped caring about the money on every trade and I finally focused on the system and the process, that's when I made my biggest leap towards becoming a consistently long-term profitable trader. And I say long-term because anyone can make money, here or there, right? And most do. But then they shit the bed the next day or the next week because they don't have the right mindset to keep those gains long-term. All right, so starting you guys off with some wisdom here going into the new week. With that being said, let's get into the actual business here. All right, so taking it from the top here, monthly chart, US dollar. I still expect a bullish month of July. I'm glad to be proven wrong, but just based off where we're at here, I want to see us try to draw up into that monthly fair value gap here. Working down into the weekly chart here. We've been watching this weekly fair value gap for the last 3 weeks now. Yes, we did drop down into it. We did trade in the lower half this past week, but if you look at the bodies, we're closing in the upper half. So far, that to me is bullish. If you actually measure this here, and we put the quadrants on it, you'll see the bodies are staying above the upper quadrant, which at present is indicating to me the market is bullish. If there is going to be a continued escalation in what we see in the Middle East, that will be very bullish for US dollar. So just keep in mind, the technicals are what the technicals are, but the fundamental side can further kind of pour jet fuel on what it is that we're looking for. So we could see an aggressive move higher, especially with what we saw over the weekend transpire here. So looking at the bodies here, staying in the upper half, that's good. That's providing discount sensitivity. So as long as we stay outside the lower half of the bodies, I'm looking for higher prices on dollar, more specifically these relatively equal highs here. That's going to have fund level stops, not fund level stops, funds level stops. All right. So let me look at so the reason why this fair value gap, I'm expecting it to send price higher. We're already in an existing buy program with bullish institutional order flow. So the bullish order block here providing support, fair value gap here support, and then basically you want to see the same thing continue here is what I'm getting at. All right, so looking at just got an announcement about the World Cup. I don't really follow that. I'm an American. We don't really follow soccer all that much. All right, so looking at the daily charts here. Okay, so they left these relatively equal lows here. Right, you'll notice that we dropped down into it. We cleared the sell side here. What I have labeled here in black, you're probably wondering what that is. That's a little gap, so separation between this candle's closure, this candle's open. That's like a new day opening gap. It's a discount array. We traded down into it, lent support after taking out the sell side here. So at the present right now, what I'm seeing this as is a turtle soup, basically a false break below the lows, accumulate the sell side, and then trade higher is essentially what I'm favoring from here. For that to remain true, though, we have to stay above Wednesday's low. So as long as we don't take out the low, because you see we created a swing low here, as long as we stay above, let me zoom in here, sorry. I have these huge, like 27, almost 30-inch monitors. So what looks big on my screen, sometimes I hear, well, Dylan, this is way too small. I can't really see that. So let me zoom in for you guys here. So swing low here, you can see that. As long as we stay above that swing low, that's bullish for me. And then I'd want to see this down close candle here. Once we cross that opening price, I'd like to see that be a change in the state of delivery bullish to send us higher to this high here, and then this high back here. And then remember that monthly imbalance that we talked about. However, what changes that is if we take out Wednesday's low. So if we take out the swing low, specifically Wednesday's low, that would not be bullish for dollar longer term. So those are the details there. Looking at the hourly charts here, you can see that blue rectangle there, which is that daily gap. Let me show you once more here. And let me put this one on there as well so you guys can see the details. So we're looking at this daily gap here and this black rectangle on the hourly chart now. So you'll see we dropped down into it on Wednesday, hit the daily volume imbalance. From there, we worked higher. This daily gap, we then got back above it here. You'll notice that. Let me put the midpoint on there so you guys can see that there. So we have the midpoint here. You'll see we got back above that. That's bullish. Traded up, or traded down into it here rather. Stayed in the upper half, keeping it out of the lower half. So far, that's bullish. If we are going to resume higher again, we don't want to see us take out this low here. And preferably, we'll see the buy side of the curve continue to clear these highs here. All right, so that's the business for dollar. Let's go into bonds. Keep it short and sweet here today. I have quite a few things to do here on my end. So monthly candle, I'm looking for heaviness in bonds, and that's going to support a higher dollar. So for my Forex folks, if you're trading gold, silver, Forex, whatever the case may be, you absolutely have to know what the dollar and what the bonds are doing. So covering that here for you guys as well. Lower bonds leads to higher dollar. Higher dollar leads to risk off, meaning bullish dollar. You're going to see weakness in risk assets like stocks. Big surprise last week, right? While we saw lower prices, not really. And same thing for your metals, your Forex, and all your other risk assets. So monthly chart, I'm looking for a heavy month of July here. So looking for weakness here for the remainder of the month. Not a lot of details to talk about here on the monthly. We're still inside this nasty consolidation, but we'll refine the details here on the weekly chart here. Let me put them all in the frame so you guys can see them. All right. So we talked about this inversion fair value gap here. We respected it. Market sold off from there. We attacked the sell side here. So if you guys remember, I gave you this low here as an objective last week. We expanded down into that very nicely. And so far, order flow remains bear. So we're trading up into this balanced price range. This is a balanced price range here. Because we've traded lower, higher, and then we've left that range here to the downside. So it has both passes. Sell side delivery, which is a down pass, up pass, and then we've left it. So now all this here is back and forth balanced. So this is balanced, efficient delivery here. When you are bearish, you do not want to see balanced price ranges traded through. So this range of price action here, from here to here, treat that as a key balanced price range. So the market dropped down, took out the low here, and then it traded back into this efficiently delivered range here. If the market is to remain bearish, we have to stay below this range and trade lower. So this is all a balanced price range here, and we want to see the market sell off to those levels. That's a big reason why whenever you are bearish, like for example here, up close candle is going to act as resistance here, send price lower, right? Prevent it from getting above it because it's also, in a way, it's a balanced price range. So looking for sell side here. If we accelerate, which is what I'm expecting, we have these juicy lows down here. And that would be the next draw here for the bond market. If you haven't already, can we look at the semiconductors? Yeah, I got you. All right, daily chart, refining this further here. We talked about this gap here last week, the body staying in the lower half. Market then took the elevator ride lower, very nice. Created an inefficiency here, traded up into it. Bodies are staying in the lower half here. So we just had a little shallow run below this low last week. So I would like to see if we could accelerate to the downside here on bonds. And that would support a higher dollar. So we kind of have that relationship between, at least what I'm expecting to be, at least for right now, bullish dollar, bearish treasuries. And that takes us into the $1 million question of the stock market, right? So let's look at the monthly chart here. We dropped down into this monthly fair value gap. I'm watching that going forward on a monthly basis. We're finding it down to the weekly chart here. We have our range low here. The reason this is a discount fair value gap is because it's in a discount of this range high, this range low. We have our equilibrium or 50% price point here. So what's the first key level or the first PD array that we reach below this equilibrium, this fair value gap here? So if we do accelerate to the downside, I would look for this discount weekly fair value gap. What has me leaning bearish? Well, if you look at this wick here, right, we're going to treat a wick like a gap. Trade up into it last week. You'll notice we stopped perfectly at the midpoint here. And then we opened the new week and we couldn't get above it. So we see the market staying in the lower half of this weekly wick, which in my mind is bearish. We then rolled over, attacked the low here. So here's what we're watching. How we trade below this low here. If we accelerate through it, then that's going to take us deeper into this range. More specifically, I'll be looking for this weekly discount fair value gap here, assuming we accelerate through this low here. However, if we take out this low here and we simply reject and start working higher, then we'll likely resume new all-time high protocol. So we're at a key level here. I want to see how we trade at these levels and what we do from this sell side here going forward, and that'll be indicative of what we're likely going to do for the rest of July going into August for my analysis. All right, so daily chart here. Let's clean this up a bit. I'm going to take off the 50% here. That's not necessary anymore. Just note, if we do accelerate on the downside, then we have, whoops. Just note we have equilibrium here, and then this weekly key level there. All right, so zooming in here. Last week, we talked about this imbalance here. If bullish, it would have to lend support. It didn't. We traded to the low, came back up to the high, sold off from there, broke down. So this level here did not provide the support that we would need to see for the market to resume bullishness to all-time highs. In fact, it sold off and was bearish. So a little bit of having to adapt last week inside this consolidation profile, which we're starting to leave it now, which is a good thing. So if you've had a little bit more trouble the last couple weeks, that's reasonable. The market was in a daily consolidation, meaning look at the daily candlesticks. It's not in a hurry to go anywhere higher or lower. So you have to really know what you're doing. You have to really be patient, and you have to be comfortable letting price runs go, especially in these consolidation markets. So just know the visibility is limited in those consolidations. If you struggled a little bit, that's fine. Just note we're going to get back into likely more cleaner delivery now that the market has left this consolidation range here. So we broke down to the downside here. We accelerated through this low here and then took out this low down here. So my key levels for this week, again, same thing as the weekly chart. We have this key daily low that we've taken out here. How we trade there is going to be key going forward, right? So do we accelerate down through it and really melt lower, right? And then get below this fair value gap here, indicate they want to reach down into this one? Or does it sweep the low like we did here, respect this inefficiency here, and then start to work higher from it, right? Which do we see? That's what I have to watch going into the new week. So how we trade there is going to be key. If we get down below this gap here, which if the dollar remains bullish and we continue to see escalation in the Middle East, I do expect stocks to sell off. So if this turns into an inversion, fair value gap here, meaning we get below it on a closing basis, we then use that as a premium key level above market price to then expect weakness from, send us lower into this gap here, and then as far down as that weekly imbalance that we talked about there. All right, so let me put that back because I don't want to prematurely call it an inversion fair value gap, but that's the scenario I'm watching for here going into this week. All right, looking at the hourly chart here. So here we have a reclaimed fair value gap. This is reclaimed because it was initially a sell side imbalance, buy side inefficiency. So it reclaimed its initial roll because if it's bearish, it should hit this and sell off, right? But instead it used it as an inversion support to rally. Now that we're down below it, it should act as a premium array, right? So we hit it on Friday, part of the TGIF for the mentorship group here. Let me cover something real quick for you guys here. I know I wasn't able to do that much with you guys Thursday going into Friday, other than just live trade, get paid, and get moving. I had folks doing maintenance here in the building, so I wasn't able to concentrate like I would usually want to. So we'll have to squeeze in a little bit of a review here. All right, mentorship group. Looking at the Friday trading here, let's put a vertical line on there real quick, and then I'll get into some Q&A. So this is going to be in place of the market review that I was supposed to do on Thursday for you guys. All right, so what am I measuring here? Well, I have the high of the week here and then the low of the week. Why would we do that? When you start getting into Friday, think of how a weekly, one second, let me remove that here. Think of how a weekly candlestick forms, or how any candlestick forms for that matter, right? It's going to open, right? If it's bearish, then it's going to make the high first, and then it's going to expand lower, right? So that's the open high, this body of the candle, the expansion lower. And then it's going to close somewhere near the low. But we know it usually doesn't close on the low, right? It closes higher up off that low. So what this concept is helpful for, the TGIF, short for Thank God It's Friday. It's an expression that we use in America to signify the weekend is here. So thank God it's Friday means when you start getting into Friday, it can happen as early as Thursday. Once targets are delivered, being the first criteria, and we're getting to a point where it's late in the week, like Friday, New York morning session. Well, what do we understand about candlesticks? They create the open, the high, if it's bearish, and then the low, and then the close. But does it always close at the low of the candle? Not all the time, right? Sometimes it'll close higher, off the low. This is Friday, right? So Monday is going to be accumulation. Tuesday into Wednesday is going to be a manipulation, make the high of the week. And then Tuesday, Wednesday, Thursday, sell off. And then we get into Friday where it can now retrace off the low and then close. See that? Monday accumulation, Tuesday, Wednesday manipulation, distribution, right? Expansion lower, and then close off the low. Well, now your question is, well, how far off the low can we close? What's reasonable? Well, then that's where TGIF comes in, where you measure from the high, the highest high of the week, to the lowest low. How do you know what the lowest low is? Well, we're at Friday. It's New York session, so 9:30 drops lower first. If you've been studying my content on the YouTube channel, you know the first run at 9:30 is usually what? The fake run, right? So then you can fade that. And now if you have this context here, it just makes it even stronger for why Thursday is going to, or why Friday is going to be a pullback into the range here, right? So looking at this here, there we go. And we'll put that in here just for the sake of the example here. We drop down, we make a key low. We're going into Friday. 9:30 drops off the open. So you're immediately expecting pull back into the range, reversal, because the 9:30 was the Judas, right? Retail sees the market drop all week. They didn't get anything on, so they're thinking, okay, this is going to be the next drop on Friday. Go short. But they're chasing late in the week when TGIF is a factor. So now, how far off the low can we pull back up into the range? 20, 30%. So looking at this here, let's extend this. And let's take this off here. I don't really need that right now. This is going to be a key level going into the new week, but I don't need that right now. So explain the TGIF concept, which is basically the logic of how the weekly range is going to form, right? So you can see Monday accumulation, manipulation, and then distribution, and then close off the low. So again, your question is, well, now how far higher are we going to trade off the low? Let's go into our 1 minute chart. And we'll take off the midnight opening range. Don't need that powerhouse of a weapon, but we'll talk about that later. All right. So looking at what we have here, I'm going to take off this daily gap as well, just to keep it even more simple here. So what we have here is the low of the week, the high of the week, and then the blue rectangle here is 20 to 30%. So that's all we're going to keep on because that's all that's relevant for right now. So this is the TGIF concept. And then you can see how it just perfectly dovetails into other things that have been taught on this channel if you understand what you're looking for in terms of time and price. All right, so here we have our 9:30 open. So this starts the show, right? Buys bearish, so at 9:30 it sinks lower. They attack this low here, which was conveniently left here. Why is that convenient? Well, because if we scrub all the way back here, hold on, let me see how far back I'm going to scrub here. Well, it's way further than I thought. Hold on, guys, give me 1 second. Where's that low at? All right, well, I'm just gonna have to trust you guys are following along. So you guys putting the Doritos down, focusing on what I'm saying here. So this is the daily low, right, that we were mentioning. You just have to trust me. Well, let me just make it complete here. I can half-ass it. All right, so we got the daily low here. So that's that red line here, just so you guys can follow along. So that red line here, that's that daily low. Now, we're reaching into that daily low at the 9:30 open in the opening range on a Friday after it's been one-sided lower all week. That's right there is enough to start looking for potential reversal, market reversal profile back into the range. It is further solidified. It's further high probability when they leave something like this here. Look at this. They leave equal highs here. 9:30 trades higher, but it stops what? Just short of these highs here. So what's that doing? That's engineering liquidity. Well, why would they want to do that? Well, if they're going to send it lower, right, to reverse it, right, this is all a Judas swing here, right, get people short, get retail short. Because when they drop it violently like this, traders that don't have a model, they don't have a plan, they don't even know what they're doing, they're just going to try to pile in and think, oh, well, it's been going lower all week. 9:30 selling off, so it's probably a good idea to get short, right? When we're looking for TGIF. So the market drops at 9:30. You already understand that the first run's usually the fake run. And now with all this other context, it just makes it even more high probability. It's Friday. We're reaching a daily low inside the opening range when they've left equal highs stacked here and stacked here. So you know what they're going to do if you've been studying. And then we see the market trade higher here above this swing high here. So that's a bullish shift in market structure. Comes back down into this wick here. There we go. Stays in the upper half, rallies. First prez here. Becomes an inversion. Take us up into the buy side here. And then up into that 20 to 30% retracement. And then look at what the market does the rest of the day here. It consolidates at this random level here. So how do you know when to pull the plug on the week? Dylan, when do you stop trading on Fridays? Once the market delivers TGIF like this, I'm done. That pulls the plug for the week. Why? What else is there that's logical and high probability for the week to do after it's already done this? Nothing. Why? Because we've already seen what for the weekly range? We've already opened, made the high, expanded lower, made the low, and then now we've retraced off that low and we've closed. So what's the market more predisposed to do now? Just consolidate sideways into the close at the random price range of 20 and 30%. So once Friday does that TGIF retracement, there's nothing to do but gamble. I mean, unless you're a very high frequency scalper and you're just looking for easy scalps, the high probability runs for the week have been exhausted once you're at this point in the power of 30, because it's already done the accumulation, manipulation, distribution, and then it's retraced off the lows. So then the market will go into a sideways consolidation there. And then I promised you guys a review on Thursday as well. So get that in here as well. For those of you guys that are just here for the analysis, apologize. I do owe the mentorship group something since like I said, I had maintenance. So I was actually just able to go live, trade the price run with them. And then I had to get off, had to shut everything off because the maintenance just doesn't allow me to focus and concentrate. So for those of you guys that are just here for the analysis, you have to sit through this. I apologize. All right. So 9:30. Same thing, right? What do you know 9:30 is going to do? It's going to run for liquidity every single time. And if you know the bias and you know where the smooth highs and lows are, then it just makes it even easier, right? So at 9:30, just quick review here. Bias was bearish. Let me cover on this particular day why it was bearish here. So we'll go to market replay here. But this was traded live. So for those of you guys that are here in the audience and you're watching from the sidelines, you weren't actually live with me and the team. This isn't like hindsight stuff. This is stuff that was executed on with live funds, with people watching live screen share. All right, so looking at the daily chart here, bias was bearish here on this particular day on Thursday to reach for this low here. And actually, I did not share pre-market analysis today, but speaking of, my man Tommy did. So this day, if you did want the winning lottery numbers, you would have had it if you're in the free Discord. So if you're not in the free Discord, you definitely want to make your way over there if you guys want winning insights like these. So the bias was bearish, looking for this daily low here. So that 29,303 level here was the draw for Thursday. All right, so the daily bias was bearish here. This was on the back of market trading higher up into the new week opening gap here. Unable to get above it here. Close down below it here. Trade back up into it. Couldn't get to the upper half. That's weak. Really sells off on Wednesday. Wednesday evening going into Thursday night. We retrace here. Up into this hourly fair value gap. So you see we get up into the hourly fair value gap here and look at the bodies here. What's that telling you? It's bearish, right? Let me, so you guys can see this here. Look at the bodies there. What's that telling you? Bullish or bearish? Bearish, right? It's going to reach lower. So it's going to want to reach for this low here, this low here. Put the wicks back on for you guys because the wicks do the damage. Bodies tell the real story. So the wicks color outside a little bit. That's fine. But the bodies are telling you it's weak. From there, we break down at 4 a.m. So this is the London session. Retrace back into the fair value gap here at 3 a.m. We do that at 5 a.m. So going into New York. And then we hit this gap here. and then does what? It sells off. So is order flow bullish or bearish going into New York session? Obviously bearish, right? So if order flow is bearish, we're not guessing. It's going to reach for two things: liquidity or inefficiency. Well, what do we have down here? There's no inefficiency, so we have the liquidity here in the form of this low. Okay, so that frames the bias, the session bias for New York session. All right, and then we get into 9:30 here, and then now this is where you plug and play what you've learned from intraday trading, which is if the bias is bearish, reaching lower for the 29,303 level, which I just covered the daily chart, refined it down to the hourly chart, so order flows bearish. Looking at the 15-minute now, we have these smooth highs here. Turtle soup, false break, breaks down, fair value gap, bearish order block, we hit it, sells off, retraces, breaker here, high, higher high. Two down close candles, that's your bearish breaker, extend that through, bang, hits it, sells off. So it's an easy read for myself and my team to know price is going lower. So at 9:30 we open, they pump it higher here, this little wick, that's a manipulation, getting retail long, and then it sinks into the levels that we're looking for here. So now we're gonna look at the details here on a 1-minute chart. And actually we'll pull this back over here. YouTube crew getting extra today, no extra charge. All right, so 9:30 here, we open. Our focus is down here. And then the fact that they leave these equal lows here just makes it easy money for 9:30 to want to run for those levels. So 9:30 it opens, the market runs higher. They bump the buy side here, and more specifically here. So what you roll right into one setup for life with the bearish bias, buy side taken, displacement, shifts market structure, as a classic ICT 2022 model here. Shifted market structure, retrace, hit the gap, up close candle, that's a bearish order block, relatively equal lows here, smokes them, and then trades down to that daily low at that 29,303 level. And that was just a very nice dandy of a run there. So 9:30 manipulation, manipulation above it, one last kiss above that 9:30 open to go short. And then where I ended up going short rather, because I don't do copy trading. I teach people how to independently do this. Inversion fair value gap here, that's where my short was on the E-mini S&P. The reason I traded S&P was because I wasn't able to get the short off quick enough on the NASDAQ. So the ES still had a bit more room to run, but same principle here. So I shorted the inversion fair value gap here on S&P. Why is that a high probability inversion? Because if you look on the buy side of the curve when it was bullish, it used it as support. So it used this fair value gap to accumulate long positions. When that's the case, in the proper narrative and context, that fair value gap becomes a high probability inversion fair value gap to be used now on the sell side of the curve for distribution or smart money selling. In other words, within the logic of 9:30 already took the highs, breaks down, inversion, sell side here, and just a nice dandy of a trade there. So you guys have to review that. Appreciate your patience for those of you guys that were waiting on that review. And that takes us into this week here. So looking at the hourly chart here, we're watching this, or rather, again, I'm watching this. Make sure I have that on there correct. Yeah, there we go. So I'm watching this gap here, and let me make that red since I expect it to be bearish. So what we're watching now, looking at the hourly chart, is how we trade again below these lows here. So I know I talked about it on the weekly chart, but I want to talk about it again here. So we drop down into these key daily lows here. Let me anchor that correctly. So what I want to see now is how we trade here. If we reject and start to work higher, then that brings these highs here into play, these highs here, and these highs here. The only reason I'm even considering that is because of what they left in place, how they strategically left these equal highs here. These equal highs here. Now, equal highs in and of itself isn't enough for the market to want to draw there. But if we do see the market reject these lows here, if we do start to see the market put in bullish institutional order flow, then my bet would be it running to these highs here and then these highs here, because they're just too clean, too conveniently left. So if they're going to take it back to all-time highs, if that's the case, it'll be seen by a rejection of this low here and then the market showing bullish order flow. However, if we accelerate down through this low here, then you'll want to look at that daily fair value gap that we initially had. Watch us get down below it, respect it, keep selling off, And that's what I would look for. So I'm not giving you guys plan A, plan B. I do favor lower prices. However, if we do reject this low and start to put in bullish order flow, then you'll have to note the buy side here and then here if we start to show bullishness. So I think that's going to be it here. Go through the other markets here. Oh, SpaceX. I know a lot of you guys were particularly interested in that. So like you can see, as I told you, they would bleed this market out. So they IPO'd here on this Friday. They pump it higher. Everyone and their mother's asking me about SpaceX. Time to go long SpaceX. So you know what that means, right? The sheep are going to get taken to the slaughterhouse. So they run it higher. The sheep go long. Market breaks. Imbalance. Trades up into it, stays in the lower half, and just rolls over. So they're going to keep likely bleeding this thing out. Because again, the smart money, they exited here. Right, so they got long way down here when it was private. Retail Rick hears about it on the news. He thinks, oh my gosh, SpaceX, this thing's best next thing since sliced bread. Let's buy some SpaceX, baby. Buy it at a $2 trillion valuation. Lovely idea. Go long. Who's going to be selling to that? The smart money that bought when it was private. And then they're going to sell to the exit liquidity, which is the dumb money. The dumb money is going to come in after the fact, buy it at expensive prices. And that's that handshaking that goes on. Whereas the smart money is going to offload that position to the dumb money that wants to buy it at expensive prices, which isn't a good idea, as you can see here. So walk you guys through that, not for the purpose of just wanting to be right, but I really don't want you guys to get hurt, lose your hard-earned money on stuff like this, which I can imagine a lot of people did if they weren't here on the YouTube channel. So there's SpaceX. Told you guys they bleed it like a pig. They did. And what else do we got here? Crypto, it's in a little bit of a range here on the weekly and monthly, but I still do expect it to sell off as well. Oil. All right. So oil is probably going to rip back up into the 90s and then the hundreds, and then how we trade there will determine whether or not they take this thing back up to the highs. With what's going on, I would not be surprised to see oil absolutely surge going forward. They dropped it down into this daily gap here, hit the upper half, and then launched out of it. So far, institutional order flow is now bullish on the daily chart. And then you'll see they left all these equal highs there. So very, very convenient to trade back up into that. All right. So I think that's it for the usual suspects here. Any good questions for me here before we get going, guys? Hey, Dub, how's your day, man? Day's been good, man. Day's been good. Beautiful day here. Gonna look to enjoy some of it. Thank you for asking. Greatest, your broker to take out the liquidity. Yeah, I have no idea. You're probably trading the CFDs is probably what I would assume. If you could trade futures, I would trade futures, but if you're outside the US or in another country, you might not have access to the futures market. So you can still trade the CFDs though. Don't get me wrong. You have a model, know what you're doing. It's gonna move this similarly to how the actual futures contract is moving, so you can do fine on the CFDs. Yeah, SOXL, yeah, let's take a look at the semiconductors. I'm actually interested in them myself here. All right, so yeah, there's nothing bullish about the semiconductors right now, so I would note this sell side here, and then this sell side down here for the semiconductors. If the semiconductors drop, that's going to pull NASDAQ down with it. Oh, man, I almost forgot. I don't know how high. I should have started off with this, actually. So we've been talking about this S&P here. The market held the S&P at the highs. NASDAQ making lower lows. S&P making lower lows while the Dow's making higher highs. But if you look at this here, if you guys remember, I talked to you guys about this last week. Tech is weaker than the other sectors of the market. So tech is already below the sell side here. S&P's well above it, and Dow's well above it. So out of all the sectors in the market, tech is the weakest. And the reason that reminds me is because SOXL, this is the semiconductors. So if the semiconductors are going to bleed out, then that will pull the NASDAQ down with it. So sell side here, I'm very bearish on this market here. I think they suckered in the retail with all the hype here. And then basically same thing like SpaceX. Retail is going to buy at expensive, lofty prices because they don't know what they're doing. They're going to chase it. And now they're going to run them for their money, basically. So here's what we're looking at. SpaceX, go to a 2-day, 3-day. Yeah. So for SpaceX here, or not SpaceX, the semiconductors here, watch this gap here, and then this mitigation block here. So these two levels here, we need to stay below that. If we do, then that's the chef's kiss goodbye to accelerate lower. All right, guys. Appreciate the insight. Simple and predictable. Helps. Yeah. Awesome, man. Glad it was helpful. Appreciate the feedback, sir. All right, guys. That's going to do it here for me today. Appreciate you guys joining us here. Do hit the like button on your way out here. I will be sharing more educational content throughout the week in the education channel, updates on our analysis, anything that we may be looking at as we get new information throughout the week. Also, will be shared in the free Discord as well. So with that being said, guys, take care, stay safe. Oh, and by the way, also I'm going to let you guys know, we've got an improvement on our free course coming out. So we will have a new version of that that's going to be more concise, more to the point, and more actionable. So we are making a 2.0 version of our free course for the free community as well. So you guys can be on the lookout for that. I will give you guys updates on where we are with that once editing team here gets me abreast on what the delivery date is looking like. So with that being said, guys, have a good weekend. Take care, stay safe, and have a good week of trading. Bye, everyone.